Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the ADX Trend Strategy, a method that can combine the Average Directional Index with precise entry points to identify market trends. You will learn how to spot optimal trade entries, set proper stop loss and manage your trade or your trade position effectively. Now we have to understand what the ADX values are. The ADX indicator consists of three essential lines on your chart. The first line, which is this black line we can see here, is the ADX line. The plus directional indicator, which is the DI line, is the green line we can see here. The plus or the positive DI line is this green line we can see here, while the minus directional indicator, the minus DI line, is the red line we can see here. This shows you both trend direction and strength. The ADX line measures the trend strength on a scale of 0 to 100. When you see the ADX reading above 20, the market lacks a when you see the ADX reading below 20, the market lacks a clear direction or a clear trend rather. But once the ADX line climbs above 25, once it is above 25, you are looking to develop a trend worth your attention, meaning that once it is above 25, it is going into a strong trending situation. Values above 50 signal exceptional trend strength. Once the value is above 50, it signals an exceptional trend strength. Now the positive DI and the negative DI tells you the direction the market is trending. Once the positive DI crosses above once the positive DI line crosses above the negative DI line, meaning once the green line crosses above the red line, it signals bullish trade. You have to start looking for bullish trading opportunity. But once the negative DI line crosses above the positive DI line, you have to look for selling opportunities. These crossovers forms the foundation of your entry signal. Now let's look at common entry rules. When trading your ADX, it requires clear entry rules to maintain consistency. For your bullish trade, you start by when the positive DI line crosses above the negative DI line, while the ADX indicator reading is above 25. You wait for price to break above a recent resistance point. At this area of the market, we wait for price to break through a recent resistance line. When price breaks through a recent resistance line, that signals our buy signal. Once it breaks through, you can enter your trade at that particular area. Then in terms of a selling trade or a sell opportunity, once we see that price has the negative D line is above the positive DI line and the strength of the ADX is above 25, this signals that you can enter your sell trade at that particular area. When you enter your sell trade at that area, you are going to anticipate a strong selling trend at that area. Your stop loss placement is very crucial. Your stop loss for a long position should be placed below the nearest swing low. So you place your stop loss below the nearest swing low in terms of a buying trade. While for a short position, you place your stop loss above the nearest swing high. You place it above the nearest swing high. This protects your capital while you are giving the trade enough room to breathe. Now there are some common mistakes you need to avoid. Even as an experienced trader, they fall into certain traps while using the ADX strategy. Here are the three common mistakes you need to avoid making. The first mistake is misinterpreting the ADX value. Remember, the ADX measures the strength of the trend, not the direction. This ADX line, this black line, measures the strength and not the direction. A high ADX reading doesn't necessarily mean a trend reversal is coming. Always use the ADX in conjunction with the positive DI and the negative DI lines to determine your trend direction. So for a strong trend, as you can see from this example, that market is trending towards the upside, at this area we can see that the ADX line is above 25 and the positive DI line is above the negative DI line. So it shows that yes, there's a strong bullish trend, and at the same time there is a signal for you to trade in the up direction. The second mistake is overlooking the importance of the trend confirmation. Do not solely aim on the ADX and the DI crossover. Confirm your signals with price action, support and resistance level when entering the trade. So before we enter this trade, you have to already confirm that the market is truly trending in the up direction. As you can see, I can see series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Shows that yes, we are trading in the direction of the market. Now the third mistake certain traders make is ignoring the market volatility. The ADX doesn't account for the price volatility, which can lead to false signals. We can consider using indicators such as the Bollinger Band to help us consider this volatility. If we use the Bollinger Band, it helps us to understand a complete market picture. We can see the volatility and see whether the market is volatile enough to take such trade. By adding and by avoiding these mistakes, you will significantly improve your trading accuracy and reduce unnecessary losses. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like and subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thanks for watching, and I will see you in the next video.